Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to look at the dollar 10-year yield, go through all our commodities, do a commodity technical analysis update, and I'll give you my financial opinion as we walk on through it. We're going to start at the dollar and work our way through all these different precious metals and commodities. And we'll start right now. So this is the dollar, the DXY. I call it the relative strength currency indicator. We got smoked today. It's down 1%. Huge tailwind to commodities. And it's also a tailwind to precious metals, depending on what that 10-year yield does. But the dollar got smoked today. This is a good thing for commodities. Obviously bad for anybody holding dollars and dollar-denominated assets. And weaker dollar usually means that people are going to start flooding into assets and commodities. And this white line here has been a resistance line, and we have not broken that resistance line yet on a long-term basis. We went up and touched it. We're coming back lower, and we'll see if we're going to get that rollover in the dollar, like we did in 2002, where we rolled over and really took off to the downside, where that was a huge tailwind for commodities. And I think that's probably where we're headed, is a rollover in the dollar, and that will be a tailwind for commodity investments. The 10-year yield strengthened today, 0.83%. I think that will continue to strengthen. I know people are seeing this. They're saying this is a shoulder, head, shoulder, and that we could potentially go lower. I don't think that's necessarily the case when looking at this, the pattern here and the candlesticks themselves. We're throwing down gigantic selling pressure or increasing yields for a couple days here, and I don't see too much buying pressure in this chart in relationship to bonds. And I'll show you what I mean on the bond chart, because it might be a little bit easier for you guys to see it on that chart. But this here was a selling pressure, and then it usually reverses with a big bullish buying pressure engulfing candlesticks. So I still think that this is going to go higher, meaning that the inflationary pressures are still in the system and they're not yet done. And a recession isn't necessarily in the cards yet being priced in the 10-year yield. So this might be those recessionary fears that pull back there. And what's coming ahead of us is actually more 10-year yield increasing. The bonds, TLT, this is the 20-year. I think that this looks bearish, which means that you could see a rise in interest rates. So remember, bond prices go down, interest rates go up. This is the 20-year. You can kind of see it's a increasing wedge here. We've fallen to the downside, broken out. We did a little retest here, and we could potentially head lower. If this is going to head lower, this is bond prices. I'm going between yields and prices. Prices going down mean that yields are going up. If we were going into this bad deflationary recession, yields would be going up, or bond prices would be going up, yields would be going down. People would be running to bonds for safety. We're not seeing that. We are seeing the exact opposite. We're seeing people sell bonds, and if this heads lower, the bond prices, what that does is it increases yields. It means that inflation is still entrenched in the markets, and that the smart money buying and selling bonds are selling bonds because they're more worried about inflation than a recession. This is the smart money telling us what they are doing. And notice we've got this nice big bearish engulfing right here too, which means that prices are probably going to head lower. There's not big buying pressure in here that I see, but there is a little bit of buying pressure. They're battling a little bit, but it looks to me like it wants to head lower. The CRB index, like I said, you can see the contraction in these candlesticks. Each one is getting smaller, smaller, smaller of their opening and closing prices. We came to a support level, and now we're bouncing off that support level to the upside. Now we're looking at, can this movement and momentum be sustained upward? are we going to get a big move higher? And that's what I'm looking for. I'm looking to see if we're going to get that big move. And we're moving good right now. We're closing strong. Things are looking good for commodities. Now, gold price, we've got weaker dollar, stronger 10-year yield, and we're basically moving sideways in gold. But we're sitting on top of a pattern. Backed out a little too far there, guys. We're sitting on top of the pattern. We've broken that trend line, and we're sitting on top of it. That's a good spot for a potential move higher. We've got support underneath us, not too much resistance above us. So that's good. And with a weakening dollar, we could see these move higher. We're putting in a nice bullish candlestick for silver. We have a broken downtrend line. This is the dailies here. I still think this could work its way higher at this time. So silver looks good. And platinum, also putting in a bullish engulfing where we could break higher and break above that trend line. And I know some people ask, or they say, this trend line cuts through things. I did it on purpose, guys. In charting, and I don't know if they teach this in regular charting or not, all that matters really is at what price did the majority of this stock trade at? That is your support. So if the majority of the trading happened in this region, all in here, when you get above that region, when you get above this line here, $1,000 or so, you've got good support underneath you where you want to go higher. If you're trading below it, it acts as major resistance as you come up, and you could trade there longer. And right now, we're starting to break through all of these things. And a lot of the times, I cut these wicks off. They don't actually sit there for any length of period. They trade up, and then they trade back down. So I cut the wicks off. I put it basically where things have traded the most and put a line there. Here's the dailies. So I basically look at, say, maybe a weekly chart. A weekly chart might be a good spot where you get some good, strong closings. And I kind of cut through some things and say it's roughly in this area. And it doesn't matter to me. I don't have to be precise because I'm not trading this in a short-term range anyway. And even if you are precise, it doesn't mean that the markets will trade based off of how accurately you've drawn in those lines. It's going they're going to look and see where they can knock out stop losses. They may push this, the market makers may push this a little lower to stop everyone out and then reverse it and go higher. So I'm not as worried about where I draw some of these lines. I'm just looking for the overall major support resistance levels. And that's what I'm concerned with. XAU to gold ratio, we've broken the downtrend line. Now we're starting to get a little bit of buying pressure. That's probably going to head up higher over time. That's where you want to start looking at some of the gold and silver mining companies in this short term. The long term, we want to break the big downtrend line. We need this line to be broken, and that's where big moves and prosperity happen above that line. And that's what we're waiting for, those big moves. Now here's SILJ. SILJ, zoom in. We've broken the downtrend line. Good little area to start looking for potential companies. And same with GDX. GDX has also broken its downtrend. I think it's a good spot to be looking at potential companies that you view as good companies for long-term investment holds. Switching to crude oil. Crude oil is right on its support line. It's this long-term support line starting in 2020, and we're hitting it a couple times here. I could draw this slightly different where this pivots a little bit differently. So it's somewhere in this general vicinity of support. And I know people, they get very caught up in exactness, but the line is somewhere in this region. We're getting support. We're getting some buying pressure. I think this will go higher after they stop releasing the Strategic Petroleum Reserve. I think they are screwed. I think we have an energy crisis. I think this winter oil is going higher. Natural gas is going ballistic. I think we're going to see some crazy stuff. I am positioning for an energy crisis. I'm not selling my shares based off short-term technical analysis, which is the least statistical probability. I'm going for the supply demand imbalances in the market and the problems that are in the market that need to be solved. I am going to participate in that investment. This, to me, we had a short-term move lower. I think will eventually work its way higher after this fall. The short term between now and October-ish is going to be difficult to see what the heck this is going to do in crude oil. I am holding on to my positions, but I'm trying to figure out where to add if we're going to add. And now may be a great time to do a little bit of sprinkling, even though we may go a little bit lower, because we could go higher here based off of where we are at the support levels. Natural gas, this thing does not want to fall. I am hoping for a fall down here. I would buy the poop out of it if it did that. But we continue to go higher, and with Freeport coming back online in October, that's going to connect us to the overall international pricing. And I think it's going to be pretty resilient in the area that it's at. And in the short term, we'll see where this thing goes. But I'm holding on to my positions, and I'm looking to add if we see weakness. If we don't see weakness, I might add into other companies that are already down and out and are turning around. So we've got a lot of options here. And that's where the Platinum membership in the description link below, I have a midweek update. I've got some really good picks that you guys may be interested to participate in if you want to. So definitely subscribe below in the description link if you want to know what those picks are. XOP, yeah, you know me, ETF. We're pulling it out. We were coming back down earlier in the day, and we're getting some strength. This still looks like it's got some legs underneath it. The buyers stepped up to the plate and showing us that oil is going higher, natural gas is going higher, and XOP could go higher. This is a setup with a little bit more selling pressure in front of it, but it doesn't mean that we will go lower. It is still looking quite strong here. So that looks good. OIH, which is the energy service companies, this guy's still moving sideways with a little bit more momentum going sideways. We still have this large selling pressure before it. The buyers haven't come in here and convinced me that this is going to go higher yet, but I'm not going to sell anything. So we've got, big downward pressure here, and that consolidated. We had a move higher, and then we got another kind of impulse move lower, and we'll see if this thing rolls back over a little bit. But again, big picture view, this is going to go way higher. Why? Because we have to invest in energy to get energy. And energy service companies are those investments. So I think this is going to go much higher on a longer term time frame. In the short term, we still could have a little bit of selling pressure left in this thing. Looking at uranium. This is the Sprott Physical Uranium Trust. We are flat in the futures prices. The Sprott Physical Uranium Trust, if you'd like to show us, grace us with your presence, U.UN. Broken down trend, big buying pressure. We're moving sideways at this time. I do think eventually it'll work its way higher. There's no reversal candlesticks that we're going to go lower necessarily, so it still looks good. URNM, we had a large selling pressure day yesterday. The buyers showed up today. They showed up and said, hey, look, we're here. We're here to push you higher. So we've got a little battle going between the buyers and the sellers in this general vicinity. We have to see which way we go in the short term. Medium term, I think we're going higher. Long term, we're going higher. But short term, next couple of days, we'll see which way this thing ends up going. CCJ, kind of our leader, still moving sideways. It was an up day. Momentum was slightly down throughout that day, but we do have this bullish engulfing ahead of us. Still looks good for a potential move higher if the buyers want to push it here. The sellers haven't want this thing yet. Coming down to TAN. Now, this is the solar ETF. I was talking about it a little while ago. I said this thing looks fantastic to move higher. Symmetry-wise, you cut this thing kind of in half. This side looks like this side. The buyers and sellers interact with each other at the same rough points. So when this goes up, it hits selling pressure from these guys over here. Selling pressure, and now that selling pressure is easing. And I think we're going to go higher. It looks very good for a potential move higher. COPX is also finding its bottom here, and we're starting to move higher. Broken down trend line. We went sideways. We did a little bit of moving around, and now we're starting to move higher. That looks good. And a lot of the diversified mining companies are going to look good. We talked about this in this general vicinity of the diversified miners potentially being good pickups on the website. So that's good. Scrolling down, looking at rare earth metals. Rare earth metals continuing higher, looking strong. Broken out of this wedge type pattern to the upside. Lithium, looking strong. We were talking about the resistance level. We broke out. We went sideways. Now we're starting to move higher. A lot of investment opportunities around that. S&P 500, we're moving on higher. These weren't reversal candlesticks. Buyers came in, pushed it higher. Same with the U.S. Composite Index, pushing higher. So this all started with the broken down trend. We should have been buying in this broken down trend. We should be enjoying the fruits whoa, of that move higher. So that looks good. XHB, moving higher. We didn't break below that support level. Moved higher today. We'll see if that continues higher over the next few weeks. Lumber, killing it. We know where that support level is. We drew it in. We hit the support level. Now we're just rocketing higher. So that's a good thing for, interest rates coming back a little bit. Yeah. We're seeing mortgage rates come on back. Lumber going up. XHB being quite resilient. It's looking better for home builders. I wouldn't say lumber prices going up is better for home builders, but looking at palladium. Palladium still looking like it wants to go on higher. Lots of buying pressure there. I still am favoring platinum, the substitute of palladium. Cocoa futures breaking out. Like we said, broken down trend. Now we popped higher. There's a downtrend line coming here. We popped up. It's looking good. We could see a reverse, return move before a move on up. Wheat. Wheat looks great here. I think we're going higher in wheat. Looks very good. We've broken the downtrend. Everything's intact for a move higher. Soybeans moving sideways for the most part. I don't think it looks as good as wheat and cocoa. And then corn also trying to chop sideways. I don't think it looks as good as wheat and corn. And then copper looking strong. Looking strong, copper. This also just doesn't mean that copper is going up. It means that the economy could be getting stronger. People are seeing that the recession is behind us, perhaps, and that this is a leading indicator for a move higher. We've got moo. Moo is a way that we could play all this agribusiness, soybeans, corn, and all wheat going up. This looks good to go higher. That's moo, the ETF. Aluminum is strengthening. So there's a couple of investments that we could have around a strengthening aluminum price. And there's some options there that I'll talk about in the midweek update for the Platinum members on the website. And then the BDI has been basically moving sideways. Remember this pattern, guys. We've got a pattern in here where you kind of come up, we come down, and then it's an ABC correction, and then we could see this thing move higher, perhaps. I am still very much long in the shipping companies. So I'm remaining long in shipping. I'm remaining long in all of my commodities. In this fall, we could see some volatility in oil, natural gas, uranium, and all these different things. But I still think there's an energy crisis. I don't think the problems have been solved. I'm going to remain long, and I'm gonna see this through to the end until we get inventory numbers that are increasing. Inventories are still declining. Even with the SPR releases, we are declining the inventories. So I still think that problems exist and they have not been solved in the markets, and I'm going to remain long until those problems are solved. All right, guys, if you guys like the content, give me a thumbs up. Subscribe to the channel, subscribe to the website below. Platinum membership is the membership I think everybody would want. You get full access to the website. And that's what I'm going to end with. So we'll catch you next time. This is Finding Value.